Welcome back. Lower corporate taxes add straight to a company's bottom line. Music to the ears of investors who were hoping for an earnings revival over the last many years now. In fact, the move is being compared to P. Chidambaram's dream budget of 1997. Someone who shares this view is the MD and CEO of institutional equities at Motilal Oswal Financial Services, Rajat Rajgarhia, joining us right now on the show to take us through his bets on companies that stand to gain from this move the most. Rajat, thanks very much for taking out the time. Obviously, I don't believe your commentary would be any different from the ones that we've already heard so far, as this being one of the biggest booster shots that we've seen in recent times.
Well, yeah, that's true. In fact, I think we have not seen a step like this in at least a couple of decades. Even in 1997, the dream budget that you just referred to, the tax rate was lowered from 35% to 30%, but the size of the economy that time was just about $400 billion, right? Today we are almost inching towards $3 trillion, and a tax rate cut from 30 to 22 on a size of economy like this is an unprecedented move. So I think we do not have any historical comparison of a measure like this, at least in the last 20-25 years, and it's just 2 days. So markets are, kind of digesting it right now. But this is something where the implications of this will continue for a very long time to come.
So we have been seeing a monetary push from the RBI. So far this year, 110 basis points have been slashed. Expectations are another 25, maybe more in October. And accompanying that now, you have a fiscal push. So you have, both the angles playing out. Do you expect this to have a really material change in terms of the overall growth prospects by the end of the year, as well as the EPS translation of that? What has Motilal Oswal factored in?
So I think it's very important to note that while RBI has been on a rate cutting spree for the last 6-7 months, the effective transmission of that in the system has really not been seen, and that is because the risk appetite was not there. I think what this fiscal stimulus does, that while it resets the corporate earnings growth, it will also help in building some risk capital on the corporate India's balance sheet, and that in turn will also help in the transmission of the monetary policy easing that we have seen. So just monetary policy easing on its own would not have worked, but now with the fiscal stimulus, I think the fiscal stimulus will do wonders, but at the same time it will also allow the monetary policy transmission also to happen in the system, because the economic activity will start picking up. I think at least right now when you are seeing resetting of the growth expectations happening more, because everyone has been quite busy calculating how much of upgrade you get to see because of this cut. I think the bigger impact is that once this profit reset happens, then how does that flows back into the system, either in forms of lower prices or higher investments or higher dividends, which will then stimulate the economic activity. That is not happening this week, next month. This is just the beginning of that, and I think it will happen over a period of time, and that is what markets will be more excited about.
Yeah, and Rajat, to take that point forward, I just want to get your sense, because market conversations that we've been having, we're also pegging this to be a move which pushes consumption in a more sustainable fashion, which will be consumption led by actual income and spending, and not leverage-based consumption that we've been seeing so far. So so far household savings have gone down, consumption has been taking place on the back of household leverage increasing. Now when this move has come in, you're going to see companies putting up more plants, new companies getting formed, job creation, and therefore the actual income in the hands of people going up, and consumption then taking place in a more sustained fashion. Do you agree with that?
Well, I think yes, because if you just take a scenario of two companies, one company where the top line growth is 20% and the profit growth is 20%, compared to another company where top line growth is 5, but they keep boosting their margins, right? And the profit growth follows. The former company will always get a better multiple because they're expanding the market. In this case also, when you start seeing consumption growing because you have now the overall market expanding, more investments coming in, perhaps more jobs in the coming years, right? That is what will be good for the markets rather than the leverage based consumption that perhaps we have been seeing over the last 3, 4, 5 years, because that had to come to a full stop at some point of time. But I think at least what this measure does, it brings hope that you will see some investment. Look, for the next couple of quarters, companies will be busy clearing their inventories, will be busy shoring up their capacities, unused capacities that they have. But as those things get in process, the confidence will return for them to start setting up new. And the bigger message that this reform does is send a message to global corporations all across the world that India is welcoming them with a very competitive tax structure for them to consider and setting up their capacities here. I think that is a story which cannot get captured in the stock market today, but which will get captured in the economy in the years to come.
So in terms of obviously an EPS boost, I think you're factoring in about 8% on the Nifty. And where exactly are you seeing the risk on trade coming back in terms of sectors?
Look, 40% of the market is today financials controlled. So this market is unlikely to go up unless you financials participating. I think 40% is financials and another 30% is closer to export oriented businesses, which is either in some form of IT, pharma, to some extent, oil and gas and petchem, etc. Right? So I think 40 and 30 and the remaining 30 is a mix of many other sectors. So this 40 of financials, that 30 of rest of the sectors, which are largely all domestic linked, are the one where you are seeing asset allocations rising right now. But I just wanted to make one point here that events like this, whether it was the event of a 1991 reform, whether it was an event of 2014 where we got an absolute majority for a government in 3 decades, or an event like this, they kind of become country re-rating events, right? So you see asset allocators across the globe looking to rethink about their allocations to that country. I think we are just 2 days into this event. These events play out over a long period of time. So this basically will first boost the country's multiple which we are seeing at the Nifty level. And then you will start seeing how each sector, each company is positioning. I think a 10 to 15% earnings upgrade because of a tax rate cut is one way to look at it to mask up the or to shore up the stocks, because you get that proportionate earnings benefit. But more important is how do companies use that to create a more sustainable earnings and higher valuations for them in the years to come.
And one last question, Rajat, what have your changes been to the index targets at Motilal, if you'll have, changed your view in line with the other brokerages?
So we don't make index targets. We basically make index earnings growth, and then we have individual stock targets. We have really not changed much of the positioning because for the last couple of months, we have been favoring private banks. We have been favoring some of the consumption names. I think autos is something where we still need to see at what point of time you will see recovery coming full blown into the space. But I think fair to assume that some of the big performing sectors like IT, where we have been almost market weight to a bit of overweight, is one where we are advising investors to use some funding out to deploy into the domestic cyclicals. Cement is also one space where I think things have been slow for some time, but we think that post this entire push that we are seeing from the government, that is one space which can also see more interest in the days to come.
Okay, got that. Rajat, it was a pleasure chatting with you and getting your thoughts on the platform. Thank you so very much for joining us.
Thank you.